Welcome back. This one thing could destroy your contract and everything that you've hoped and worked for during the course of buying a home, and it's the appraisal. And how can I help you to kind of look at things and to look for things? Well, let's go through that right now. Let's say you have an appraisal, you've gotten it back. Now, how do you challenge it? Well, let's talk about what an appraisal is first. A home appraisal, it's part of buying a home or even selling a home for that matter, if it's somebody that's going to be getting a loan. I'm not going to talk about the different loans, the VA and the conventional and FHA. It doesn't matter. An appraisal is an appraisal. You've got to go through the appraisal process, process, if you are getting a loan. Or if you're refinancing your current mortgage, you've got to go through that process as well. And anytime you're selling to as a seller, anytime you are selling to anybody that is not a cash buyer, and we'll talk about that toward the end of the video, and I'll also talk about some things, I hope you stick around, that I do when I represent sellers to make sure that we get over that appraisal hump. During an appraisal, an appraiser who is licensed in the state of Texas and goes through an immense amount of education and mentorship and training to get to that point, they give their unbiased view of the value of the home. They create a report, and it's usually, I don't know, 25 to 40 pages long. I mean, it's pretty intense. They talk about current trends in the market. They talk about comparable sales nearby with similar properties. The borrower, the person buying the home, is responsible for paying for the appraisal. Now, what is the fee on that? Generally between $500 and $700. I haven't really seen anything that much more, but I think as the square footage on homes go up, it can go up a little bit higher than that. It's going to depend on how long it's going to take to actually do the appraisal. If a home appraises for, and I got something else important to tell you, lower than anticipated, the bank's not going to give the loan. There's ways that you can work around that deal, but bottom line is the bank says it's worth X and the contract is Y, and we've got to get the valuation and everything from X to Y, or find a solution to get to Y from X. I know that's a little bit confusing this early. A bank wants to make sure that they are not lending more than the actual home is worth. And a lot of this stems out from the 2008 crisis. They were still doing appraisals, but what was going on then in a snapshot was that banks and mortgage people had their own group of appraisers, and they'd say, hey, I need you to go out and appraise this house. Here's a contract at $650,000. We need you to figure out how to make that work. Well, you know what? When people weren't able to make their loan payments and everything, and the things went into foreclosure, who got blamed? Well, it was the appraiser. It wasn't the lender. But the way things work now, all over the country, not just Texas, is that a lender will make a request into a pool, and whoever picks up or wants to pick up that appraisal will do so. Now, here's the problem. We're in Flower Mound, Texas, just north of Dallas and Fort Worth. Somebody from Waco, somebody from Austin, or even further south Texas, or up in Amarillo could say, you know what, I'm going to take that appraisal because I need the money. So they're going to drive down here or up here, and they're going to do an appraisal on your house. Here's the problem. They're not an expert in the area. To them, it's just a numbers deal, right? But to you, the buyer, to me, the buyer's agent, there's more to it that goes into that. Or if I'm the seller's agent, there's still more that goes into that. So one of the things that you can do, which you don't generally have a lot of time, because sometimes the appraiser will pick it up late in the afternoon on sometime during the week, and then the appraisal happens the next day. So it's that trying to figure out where they live and everything, that becomes a little bit trickier and harder to do. So bottom line is, look at an appraisal as a financial inspection for the bank. You've already done your general inspection. When these appraisers come in, unless it's an FHA or VA loan, which we're not going to talk about today because that's a whole different set of requirements. But let's just talk today about conventional loans. They're going to come through and they're going to make their own inspection, not only of the condition of the property, but the valuation of that property as compared to other ones in the neighborhood. Now, there was a point where an appraiser is really not supposed to go out a mile and a half from a property, but depending on if you're kind of in a rural area, kind of east or north of where we are here, it may not be possible to get a comp like that. So they have to stretch that limit a little bit more. They're not supposed to go more than 6 months with a comp, with a sold property. And let me stress this. This is when they're doing an appraisal, they're not counting properties that are actively on the market for sale, only properties that are sold. This is something I've got into with agents in the past. They're like, well, they're asking 500,000 for this house and 550 for that house. It doesn't matter. They're not sold. You can ask $1 million for a $100,000 house, and it doesn't matter until it gets sold. And that's the bottom line. So one of the first things you might want to do, that you do want to do, is since you are the buyer and you have paid for this appraisal, you're going to get a copy of that. And you need to get with your mortgage person and you need to get with your real estate agent and you need to go through this thing and say, okay, what happened? And then you need to go back to the seller's agent and say, hey, you guys said this house was worth $600,000. The appraiser says it's only worth $550,000. Where did you come up with this price? I want to see your comps. And you need to start a conversation. And I don't mean having a conversation that is aggressive or confrontational. I'm talking about two agents trying to facilitate a sale on a properly valued home. The seller always dictates the price. It's not the agent's job to dictate the price. It's the agent's job to give all the information so that the seller can make a decision on the price that they want to list it for. When we were in COVID, and even after that, a little while after that, homes were selling for 20, 30, 40% over asking price, which was crazy. And obviously none of those properties would appraise for that kind of money. There is a waiver that buyers were signing out of desperation just to get into a house because inventory was low and prices were going crazy. Interest rates were 3 and 4%. So they were willing to pay more for the house to get the lower interest rate. The problem with that is and this is for another time, but if you have a contract for, say, 600,000 and you're going to put down 10%, so you're going to put down 60,000 plus there's going to be other closing costs, which could be another 10 to 15,000. So from round numbers, we'll say 60,000 down, $10,000 for closing costs. So now you're at 70,000. The $600,000 house that you wanted to buy comes in at, say, we'll just say 580,000. So you've got a gap in the contract between 580 and 600 to the tune of 20,000. The expectation on a waiver was that you would be able to cover the 20,000. So now you're coming up with 20,000 to get back up to the contract, 60,000, which is your down payment. Now you're up to 80 plus closing costs is another, 10 to 15,000. So what, 95,000. Or, the seller can lower the price. You can adjust the price to whatever the appraisal is, and you can you have the right to provide that appraisal to the seller and say, Mr. Seller, this is what the appraisal says. And you know what? We love your home and we're willing to buy your home, but we're not going to buy it for 600,000. We're going to buy it for what the bank will loan it to us, which is 580. What do you want to do? Because as a buyer, one of the conditions in the third party addendum which is part of the contract, is the property must appraise. It's called property condition, and it's part of that whole area. So another thing that you can be looking at once you get the copy is, you know, you can't really challenge it until you know what all the issues are. You know, the sellers do not get access to the appraisal. You as a buyer have the right, just like you did on your home inspection. The seller does not need to see that home inspection. You know, if you're asking for certain things, you can take pages and parts of it out, but you don't need to give them the whole thing, because if the deal goes sideways, now they've got a leg up and they can fix everything that you paid for to get inspected. Another topic for another day. But maybe the number of bathrooms is listed incorrectly. It says that there's 2.5 bathrooms when there's actually 3 full bathrooms, or they're counting a room, which is an office. They're not counting it as a bedroom or as a living space because it didn't have a closet, or it does have a closet, you know, vice versa. I mean, the house that I purchased is technically a 4-bedroom because I have a window over here and I have a closet over there behind you on the camera. So it's technically a bedroom, but it's more like an office. And that's what I treat it as. The other thing you need to look at is, are the comps up to date? Again, when you are doing comps, when I do comps for a seller, can't go back, you should not go back more than 6 months. And 6 months in this crazy market is kind of stretching it. You know, you may not be able to find comps that are just 3 months out, but you should be able to find comps that are 6 months out. And do not be afraid to tell your agent, if you're the buyer, say, you know, we need to look at and see what the seller's agent has as comps. And, you know, if they did their job, they shouldn't have a problem sending them over there to you. Something else, something else you kind of got to look for is, you're trying to find an apples to apples as best as you possibly can. It's not always possible, but you know, there might be a house that's much bigger. There might be a house that's much bigger that sells for less, could be in pre-foreclosure, could need a ton of work, or you might have a smaller house in the same area that is valued at higher than yours. And you know, you got to find out, what did they do, a complete gut? I mean, did they kind of tear it down and add on certain things? So you got to find out, you got to look at the recent comps and find out what the appropriate comps would be to your property. Now, this is a big deal. This is what you've been waiting for. Are there any improvements left over? There's a report that I run. It's called the RPR for short. It's acronym for Realtors Property Report. And there is a thing in there where if you have put in a new roof, let's say within the last 12 months, that roof costs you $20,000. I can plug that in with the month and the year, and it will depreciate the amount and give the current value. That also goes for any bathroom updates, maybe new carpet, maybe what else? I don't know that you can get away with paint. I've never tried that one before. Gutters on the house, any major improvements that you did to that home to kind of improve the property. So that can actually boost your appraised value up as a seller. A lot of agents don't know this and don't do it. I don't really know why, because maybe it's just too much work. To me, it's not too much work. You know, I've got some listings coming up where the seller has done over $100,000 worth of improvements. And so I need to be able to show that and back it up and say, okay, this is what they did, X, Y, Z, A, B, C, whatever they did, list it out and have that ready for an appraiser. As a seller's agent, you cannot, when you're trying to provide information to the appraiser to make things good, to kind of justify the contract, if the comps in the neighborhood are a little bit weak, he or she, the appraiser, will not accept the selling agent's comps because that becomes a conflict. They need to do their own comps on their own. But what they will accept is they'll accept the contract, they'll accept the survey, they'll accept your list of improvements with how much money was spent on that. And yeah, that's about it on that deal. But that is one thing. If you're selling, do not leave it out. If you're buying, the appraiser needs to know that as well. How well does the appraiser know the area? We kind of discussed that a little bit. Hopefully you're going to get somebody that is, but I have seen situations, nothing that I've been involved in, but what I have talked to mortgage people is that, they've had people come up from Waco, which is only about an hour, 45-minute drive, depending on what part of the Metroplex you're in, or DFW, depending on where you are. And these guys will come up from Waco or over from Abilene, which is a couple-hour drive, and they have been able to get appraisals challenged based on, they really don't know the area. Now, they had to get another appraiser, and that costs money too. So you kind of got to be prepared for this. But as a buyer, you have the ability to get out of the contract if the seller doesn't want to budge. If you don't have the money to come up with the difference, it stinks because you've already paid for option money that you're not going to get back. You've already paid for inspections that you're not going to get back. So, I mean, you could be out, $1,500, $2,000 right off the top, depending on what inspections you got done. And that's why it's super important to work with somebody that is familiar with the area, that possibly has lived or lives currently in the area, so that they can kind of guide you and say, you know what, they're asking a ton of money for this. I don't know where they're coming up with this valuation. And if they can sell it, bravo. But if you find yourself in a difficult situation with the appraiser and lenders, then you need to find another lender. And most of these lenders, the big banks are a lot harder to work with than the local banks and the local lenders. I don't even know that I would really like working with a lot of the local banks myself, but I like working with a lot of the mortgage independents because they can shop things around, and it's just kind of a different scene with those guys. But I'm Chris Hooper. I hope this has been a help. Check out my other videos, and I look forward to hearing from you. Please subscribe and comment if any of this has been some help, and we'll see you next time.